Okay, good afternoon, everyone. You're listening to the Voice of Vision X, and today's date is the 14th of September. Wake up to September, everybody. I think I did a video on the 5th, I think, or so. I'm here to give you a quick update again. If you watch my last September 5th video, you will see what I talked about, that the dollar is going to be strong, and with informations and analysis coming out from the US economy, we're expecting dollar to be strong in the month of September, which is always a bad month in the whole financial world. I don't know how you look at the long run, experience is the key in this business, and you know, those hard lessons you've learned through losses are actually what a key to where you are going in this business. And I will just start by first of all analyzing the dollar. Um, you can see that the dollar is on a rising channel. I guess in it from the downside on the weekly. So I'm going to drop down to the daily chart to just do a quick rundown of where the dollar was. So as you can see, the dollar played a fast trick on everybody that was, selling from this particular broken support. But what we do here, we usually confirm our break and retest strategy before, we don't do aggressive entries, because normally this is supposed to be an aggressive entry. A lot of people enter thinking that the dollar will just come and retest and continue going down. Well, actually, what the dollar did was, after breaking that particular support, it did a fake out into particular area again and continue to the upside. So normally the target of this continuation pattern, let me to zoom it very well, you can see that we had support, 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 then broken support, did a fake out, and we tested and went to the upside. So these are areas you should be looking out for to sell or buy from. And we at VisionX, we are not aggressive traders, we are conservative traders, and you can see that the market has been very, very sweet. The dollar has been very, like, this is one of the best market I've ever seen this period. Are you getting it? We started trading the gold all the way from this particular, what's it called, 20,000. Is it $2,060 or $2,061? Started selling gold as you are right now, because I've been following this particular descending, what's it called, descending triangle, which is a bearish continuation pattern to the downside. But after breaking out, we did a fake out. That was where those large news came out, and the dollar gained weight again. And if you know how to do your analysis, your price action patterns, your chart patterns, you have all the knowledge and all the experience, you would have seen this particular entry we had on the, what's it called, dollar on the 30th of August. Are you getting it? Which brought about, taking all these, what's it called, according to the euro. Let me go to euro so that you can see very well. You will see that this market has been trending perfectly well. This was where I said, okay, is this a fake out? Yes, this is what got a fake out on the daily, and you can see the same thing happening here. The dollar even got, okay, you can see that it has been trending perfectly well on the other side. Look at the dollar. You can see the dollar fake out and the retest before got this retest and continue going. So it's even clearer on Euro USD and what's it called? It's even clearer on USD, which is the direct correlation of what the dollar. And as you can see, this market is what finding, came back here, retested, we couldn't break, we broke down, came back to retest again. We broke this particular liquidity trend line now, we've broken liquidity. Are you getting it? So anything that is making us not break back into it again. So whatever is going to happen here, you should watch out, because right now we're broken out of this ascending channel, which is a bullish continuation, supposed to be a bullish was continuation pattern, but did you wait for this retest? And what we even got here, why were you buying when you did not see a change of character to the upside? That's why you see us at Vision Next, we don't joke with this particular, what's it called, confluence, change of character. After even doing analysis, everything corresponding, we don't still do what we don't joke with change of character. So this was what we got. So I was talking about a dollar. This was what we get when we got here. Are you getting it? When we got to this particular place, it's not clear on the dollar. That's why I'm using euro on the reverse side. So when we broke back into this particular, previous, what's it called, resistance, we now broke out, came back. Are you getting we found support. Then I think some fundamental news coming out from what's it called? The dollar made the euro to go down to this extent of, made the euro to go down to break back into that descending triangle. So all your chart patterns are there. Are you getting it? The ascent triangle, sorry. All your chart patterns are there to give you a confluence for you to know what is going to happen next. Are you getting it? So as I'm explaining right now, I'm trying to use euros to, explain the dollar because I don't think the dollar is as clear as what I'm saying in euro. Probably if I drop to the 4-hourly time frame, it might be clearer, but is it as neat as what I have on the dollar? It's still neat, but let's use euro since euro is facing up and we like, looking things, we don't like looking things upside down. So look at this. What are you seeing on a daily? This is a very big, you know, big confluence that we're getting here right now. So two things are involved. Is that when you take the measurement, the market move in phases, and they use these, what's it called, these chart patterns to move in phases for you. Definitely, since this is the target, is either would have broken and continue all the way to 1.5750 or 1.1500 pips from where we are. No, 1.1500 to the upside or we'll break to the downside. So these are the two targets we had, either breaking to the downside or breaking to the upside. So look at is corresponding with every support and resistance. So when you are trading and first of all, you don't have the right experience. Secondly, you don't even know what is happening in the market. You get carried away. It's not like we are genius here at Vision Next and we see 2 months ahead or something like that. It's because this market actually use what is called candlesticks to leave footprints. It might be candlestick, it might be line chart, but these particular, markets are repeatable and they flow with some particular, in some particular ways. Either they are moving this way, is either they are trending to the upside or they are trending to the downside. Are you getting it? Or is sideways movement. So once you know these things, it's for you to discover and find out whatever short patterns they are using to move, whether you like it or not. Every market, go to dollar, go to gold, go to commodities, go to Bitcoin, they move with these short price action patterns. That's why I said it's very good for you to know what you're doing. What's your strategy? What are you doing? This is daily chart. The daily chart right now is showing me that if this market breaks to the upside, comes back, this is an aggressive entry, and you enter, you put a stop loss under here. This retest right now, where were you when this retest was happening? On this point, this retest, you're seeing that we've got a bearish engulfing candle, which broke this market back into it on the daily. So we have an ascending triangle with over many thousand pips, over 500 pips either to the upside or another 500 pips to the downside. Are you getting it? So we were inside this. So a lot of people wait for all this to play out. Then they wait for, what, the break and retest. Since this turned on to a fake out, that means the downside is either going to prevail or not. So, and as you can see right now, the euro is breaking down. Are you getting it? Breaking down. That's broken out of that time. What's it called? If I should take all these guys off. Remember, I'm on the daily, so I'm just showing you what is happening on daily. But when I go to my 4-hourly chart, you will see how this market has been so sweet and has been trending perfectly well. So you don't add sentiments to this. So when I go to the 4-hourly chart, the 4-hourly chart are always sweet and accurate for me. So on this particular day, if you watched, I think I will look for that video. On this particular day, I was saying that since the dollar was did a fake out, broke to the upside, came down, retested and failed to continue breaking structure to the upside, we might break back into the ascending triangle. Are you getting it? So we broke into the ascending triangle again and turn this whole area to a fake out. So I'm doing analysis on the EURUSD now right now, trying to because it's direct correlation of the dollar. And look at what do you see? What do you see? After it broke back into, let me use the 4-hourly chart right now. After it broke back into what's it called? Let me take that in off first. After it broke back into the ascending triangle with this, what happened? We tried to do a head and shoulders pattern, which is supposed to do what? Break this market back into, are you getting it? This is a head and shoulders pattern that if it has broken up and retested again, I guess it would have come back to this area, but it didn't break back into it. So these are the only trades we take at Vision X, because after a head and shoulders pattern break, I guess we don't still enter blindly. We usually wait for, sorry. We usually do something at Vision X. We don't joke with what our change of character. So after this head and shoulders pattern break, we're supposed to wait for a break up to the upside, retest, because this would have been a change of character to the upside. Then retesting this previous resistance, now turn into support before we now take an entry and put our stop loss maybe under 100 pips to go to the upside. I guess it's normally we use 100 pips or 50 pips, depends. We don't use tighter stop loss. So our 100 pips would have been at the bottom of this head and shoulders pattern, and would have taken this trade and taken a 5 risk to reward ratio trade to the upside. Are you getting it? Because the entire target would have been this what's it called, the extension phase of the head and shoulders pattern, which would have given us a 5 risk to reward ratio trade. So this is just how the market moves, and I don't see anything like, I think trading is easy if you decide to, apply the right knowledge and the right approach, because it just moves in these patterns. It moves in all these patterns. I've shown you now a head and shoulders pattern that failed to break to the upside, but actually did what broke to the downside, turning this particular head and shoulders pattern to that was a support before to now what a major resistance. Now look at when it broke that head and shoulders pattern to the downside. After breaking down into it again, use a head and shoulders pattern. And you know what? Doing what? Turning here towards resistance. Where were you expecting to sell from again? This was the previous resistance, support. That it broke, retested, and formed support again. So look at how accurate the market has been throughout the month of August. Look at this place was previous what? Previous support. So you don't expect the previous support. Are you getting me? When the market comes broken down from previous support, what happens? It turns that particular place to resistance. So what I was waiting for when I entered this particular 940 trade, go and check my Telegram channel, is there. I did analysis last week, and I told you guys that if this place breaks to the downside, it will now turn what? This was the previous resistance, support, now turn what? Resistance. The market came back into it again and formed an exhaustion, buy with a whole day candle, if not more. Okay. It was a bearish engulfing candle that I brought the next day. But on the 4-hourly chart, what did they do? On the 4-hourly chart, it gave you a signal that I cannot go back up again, because when I go to this resistance, look at what happened. We'll go to this bottom, what's it called? You got a double bottom on the daily chart. So you are supposed to be doing a multi-time frame analysis, because we have a previous support, we have a previous support, we have a previous support. So definitely you are supposed to expect a support on this liquidity, what's it called? This ascending triangle to the upside trend line. So when we got that support, so this was supposed to be your trades you're supposed to, have on this particular day, knowing that definitely if we went up and came down, definitely this market would buy, because there's a support from on the what's it called, a trend line support from the daily time frame. So you would have taken a buy trade from here, maybe with your stop loss under here, then we'll have resistance around this area. So taking your take profit around here, you would have made about, let me just say, 800 to 900 pips to the upside. This is how you are supposed to look at your market, knowing that you don't ever forget any other thing going further, knowing that this area might act as what? Resistance again, since it was previous support. And we are bearish inside a daily ascending triangle, broke back into the daily triangle with this particular, chart pattern that broke to the downside, changing what character to the downside, which if you measure very well, you see that it is just a 0.382 retracement to the downside. Are you getting before that? Remember that particular, what's it called? Terminology I gave you. I said every change of character to the downside comes with what? Just a zero. The first retracement is just 0.382 retracement level. So this was a change of character back to the downside. Are you getting it? Because this market actually broke and did what? Came back to 0.382. Are you getting it? Came down, we test 0.382 again, then broke down, changed character to downside. We found, you know, demands in this bottom trend line before we came back to. So most of the times, you usually see that my chart on Telegram, what I usually do is that I leave this my Fibonacci retracement tools in, because we are likely to reverse from this particular what 0.5, 0.6382. Go and watch those videos. They are there. Definitely, I talked about we breaking down from this head and shoulders pattern and coming back and turning it into a resistance again. So these were previous resistance zone that you would have seen as a very important word area of value. So when we get to area of value at Vision X, what do we even still do? We go to our lower time frames to find out, because we got this for our list. For look at this exhaustion. This is exhaustion. I guess let's come back here. These are footprints that the market leaves for you. When the market was doing this particular big buy with big buy volume, we didn't even do a proper one, got big buy again. Why was the market not continuing a big buy to break this particular what's it called, a broken support? Would have used this same energy to break back into it, then retest, turning into support again before taking the trade back up to the top of the resistance zone. But we did not do that. This is where you are supposed to know, okay, this is when, if this is a previous support, no, from the beginning, this was a fake out, right, on the daily. This whole area was a fake out on the daily, and we broke back into it during a head and shoulders pattern that is a continuation pattern to the upside. But instead, we broke the head and shoulders pattern to the downside, breaking structure and changing character to the downside again. So retesting that particular broken structure, are you getting it? Retesting that particular broken support, we saw that we broke structure to the downside again, then found demand before we came back to retest it. So definitely, we're supposed to continue with breaking structure to the downside. So it has been trending perfectly well using these price action patterns and using your areas of value, your supply and demand, your support and resistance. Because if you look at this very well, if we are to trend this, you will see that this market is been trending perfectly well to the downside. Are you getting breaking structure, coming down, continue breaking structure, and is doing here again? Are you getting before breaking to the downside? So there's an ICT, what's it called, that is going to happen here right now that I'm saying here, because you might not know. So where are you supposed to take your trades from? Let me use that terminology. Where are you supposed to take your trade from? Are you supposed to be selling now? Are you supposed to be buying now? No. Why? I'll show you reasons. But before then, let's complete this particular explanation I've been giving you here. You can see that this market has been trending perfectly well, very sweet. I guess if you are not seeing these entries, that's because you have not been following this market perfectly well. So this is a pre-construction. This is a pre-construction and change your character. So I can literally just change your character. I'm just doing it for people that understands what I'm trying to do, explain here. I guess for people that understand what we are doing here. I guess so. Where are we? Okay. I wanted to trend something for you. Look at this. If this was a previous high, are you getting it? And this is a broken, what's it called? This was a break of structure to the downside. Even if it's inside this, whether I like it or not, this was a previous lower low, lower high, lower low again. So the market switched back into it with an ABC move. So what happens? Here became liquidity, ICT. Here became what? Liquidity. So what will now happen? You would have known that if I should take this thing off, you would have known that, okay, on this particular day, this market will retrace from 0.618 area sniper entry. We took that sniper entry, go and check it 1 point. I think I did that video on this particular day, 10th of August. If I should go to my Telegram channel, 10th of August, or maybe 8th to 10th of August, I told you that I'm selling from my kill zone. Look at it perfectly well. See what happened. The market was doing a head and shoulders pattern, so it tried breaking above. But if you're wise, you would have seen this, you would have used your Fibonacci retracement tools and bring your Fibonacci retracement tools from here. Are you guessing this was the previous low, previous lower high, then low to the lower low? Are you guessing this was a break of structure to the downside? Because this was the lower low. Now, if you knew from the higher time frame or your daily time frame that we were inside this particular ascending triangle in general, are you getting it, all the way from the downside, knowing that this particular place might act as a resistance again, since we broke back into it, you would have known that this area, see a lot of confluences. So first of all, hold on. First of all, we had this ascending triangle, what's it called, rectangular um, resistance that will broke to the upside, that will broke back in, acting as what, resistance again. And our Fibonacci is also entering a Fibonacci what, Q zone. I guess. So if you have taken a trade from 0.618 or 0.5 and stop loss on up top of here, you would have left that trade to run all the way up down to the side. Then the footprint that you would have waited for to know that this market is going to continue breaking to the downside, it's when it completed what, this head and shoulders pattern. Are you getting it? That we are expecting to break to the downside, to break structure again. So if it breaks structure again, and look at before I continue, you would have known that, okay, is it coming back when this spike was going back up? Is it coming back to take all this liquidity before going down? Yes, it came, did what? If I should take this off, it came and did what? Took all this liquidity with this particular spike. I guess in this particular spike, and did what? Continued going to the downside, which broke structure again to the downside. So this is another break of structure, major break of structure, because this were fake out. So this was a major switch to the downside. That's why I labeled it a break of structure and also a change of what, character to the downside. So after reaching your character, remember all my videos, what did I tell you? It retraces just towards 0.382, 0.382 or 0.3, some even 0.2, depends on the volatility in the market that particular day. And what happened, measure from here, our lower high to our new lower low. What do you see? 0.382, sniper. So you'd have taken this 1920, 1925 entry again and taking it to the downside. And how do you know the target of where we are going to when you are trying to use a Fibonacci trend extension? Look at 1, not like magical, you'll be shocked to 2, 3. Where did it get? It got to 0.38, 0.786. Well, sniper again, take profit. I guess. So you would have waited for you to do whatever it wants to do in this particular area, then come back to 0.382, take a sell again and take it down. And whenever a market retraces just to 0.382 in a particular change of character, where do we go to again? 0.786. I guess. So if you have taken a sniper entry around this place, or you've taken this sell, because this was, what did he give you here? A shooting star. Look at it, a shooting star. Give you a shooting star there. Very, very sweet. So this market has been trending perfectly well. You are the one that has not been known. You don't know all these price action pattern or chart patterns. These are the sign languages the market uses, speaking towards each other to move. So you can either call this a shooting star. If I should zoom it very well, you can either call this a shooting star happening where? How many confluences happening in a previous support resistance zone, 0.382 retracement zone, also a major important area of value you like to sell from? Definitely you would have gotten this particular, sell of 200 pips to the downside, or is it 100 pips, 200 pips to the downside. And how would you know where the market is going to? Don't get carried away. Follow up. Don't get carried away. Follow me. Remember, we've done this and trended to 0.786. We waited again for a retest. Are you guessing it? Now bring your Fibonacci trend extension in again. Every 0.382 retracement ends up going to, is a must. It must get a 0.786 retracement zone. Look at, where did we get to? Look at it. At Vision Next, we take profits from 0.618. We don't even wait for 0.786. We're not greedy like that to wait for this one because anything might happen. That is how you are supposed to be trading the market. So if I should draw this very well, put it at the edge, the tip, and put this one at this tip. That is the tip. Okay, this is the tip. The market is always perfect. So sometimes always take 50 pips or even 100 pips out of your, trading, what's it called? Then here again. So you see that they even get to 0.786, but we are like how many pips away? Like maybe 20 pips away to get there or 10 pips away to get there. So I usually take 100 pips away from my take profit. That's why you see me taking profit almost all the time from our 0.618 retracement level. This is a very good trade now. 0930 sniper or 0920 sniper entry, and you took profit from 0.79800. I guess that's about 130 pips. That's enough. From here to here is enough to put a smile on your face. Knowing that when we touch here, remember what I usually tell you. After every change of character, it happened in gold. Take this one to go. After every change of character to the downside, getting to 0.786, the market does what? Retraces 50%. What? All the time. Retraces 50% like it did here. Look at it. After every, look at it, head and shoulders pattern, full of head and shoulders pattern, right? Hold on, let me reload this. Very, just watch. Let me show you something. This is very important. It happens everywhere. You are the one that might not have that right knowledge or the right approach of what I'm trying to explain here right now. Follow up. I want to show you something very important. I want to show you something very important so that it will help you in your journey. Sorry. Okay. And to show you something very important using gold. Because a lot of people are saying that gold is too fast. No, gold is even sweeter than, to me, you can see that EURUSD is sweet, but gold was even sweeter because gold is producing 500 pips once than EURUSD. Are you getting it? Now, look at this. After the market actually did what? I'm just trying to use a head and shoulders pattern, sorry. This is head and shoulders pattern. Broke down, retested. It came and broke structure to the downside. So since this market broke to the downside, we're expecting a reversal back to this particular resistance zone, this area of value. So when I told everybody that we are selling from here, nobody understood. And you can see the market is selling. This is another 580 pips. And if we had a break of structure here and we trace just 0 point what? And we trace all just 0.61 is 0.5. Look at the retracement. It came into the Q zone. This is where you're supposed to be selling from 0.618 Q zone. Your stop is above 1965. So you'd have taken probably a 1950 entry to 1965, 150 pips, and you would have been in definitely 500 pips in profit. That's a 1 to 5 risk to reward ratio. No matter how long it takes, September 1st to September 14th, exactly 2 weeks now. You have made 500 pips. Are you getting it? And this was on that switch. How many pips to the upside again? 700 pips to the upside. Because after break of structure, we'll have to do a reversal back to our Fibonacci Q zones. Also acting in a previous area of a value. And what is an area of value? Where we had previous support and resistance, I call that an area of value. So how are you looking at the market? This market has been trending perfectly well. This is one of the best structures I've seen. And gold is doing something sweet and perfectly well. What are you seeing on the higher time frame? Gold is in a falling wedge. Gold is in a falling wedge. So it's as simple as sweet as this. So gold must come back to $1,875 before even bouncing, using those previous support and resistance. Are you getting it? Then coming back to all these, supply zones again, before coming down. Are you getting it? Before coming down to, find a switch again, change your character into the major, what's it called, demand zones, and change character, switch character 0.382, and continue to the upside. It's as simple as that. So even though it takes till November to happen, it's trending perfectly well on your 4-hourly chart or your daily or your weekly chart. Stop using the lower time frame 1 hour to judge that why is this market not moving perfectly well. They are not meant to move perfectly well on the lower time frames. That's why you see that it throw you out sometimes and give you adrenaline rush, or kill your emotions because you are trying to use $100 or $1,000 to make $100,000. Leave these markets to run to your TP. Hold your trade. Hold your trade, for crying out loud. Are you getting it? Because these markets are perfect. These markets are perfect. Now, what are you saying? Euro USD on the daily time frame. I've done dollar and Euro USD right now. Euro USD on the daily time frame has done what? Euro USD has broken. Look at Euro USD has broken out of this, what's it called? Did a fake out. Now it's broken down. Now here is a resistance, support and resistance. Are you getting it? Here is where we are right now is a major support and resistance. What's it called? Let me go to the file chart. Sorry. Here we are right now. Look at these two places were what? These two places were what? This was the previous support, right? This was the previous support. This was the previous support. Are you getting it? Now we broke down. We've tested. Now we've broken down again. Are you getting it? So I just want to see, are you getting it? A retracement. Let it, do anything it wants to do within today and tomorrow, today, Thursday, and tomorrow, Friday. Are you getting it? I want to see this market go perfectly well. Are you getting it? But look at, if you were a good, as in, if you are a Euro USD trader and you did not see this, that means you need to be checked on. Are you getting it? That means you need to check yourself. I'm sorry to use that language. That means you need to do what? Check yourself. Because this was what happening on Euro USD for you, and you want to tell me you did not see it. This was happening perfectly well on USD for you. You won't tell me you did not see it. What is this? This is an ascending triangle and a sluggish movement which gave rise. What's this? Rising wedge, you can call it anything, which has broken right now. Are you getting? So here now becomes what? Supply, the new supply. So what I want to see if this is going to trend where this whole area now is my supply zone after breaking what? This structure to the downside. After breaking, hold on, after breaking that structure to the downside right now. Are you getting? So what I want to see right now is that continue breaking structure what? To the downside for me, because this is a break of structure. As you can see, I'm on the 1-hourly chart. So if I usually go to the lower time frame to see what is happening in the entire market generally, but I don't use it to judge. But a break of structure is what? A break of structure. Now this structure has broken to the downside. So wait for the market to build again. If you have not entered, wait for the market to build again. Anytime it wants to build it, it does not concern you. You use lower time frames to build. Come back into this area of supply again. It will give you a signal. It will use something to show you. To show you something. It might not be perfect, but it must show you, definitely show you something that I'm reversing back to the downside again. Here I found, what's it called? ICT might come and come back and take liquidity and take a sniper and continue what selling to the downside. But your Fibonacci retracement tools on your higher time frame will tell you whatever it wants to do. Again, so let's go back to the file so that we're not using one to confuse ourselves. So hold on, sorry, hold on. Let me show you something now. Let's see if we've gotten to the main target. Okay, so when we did this, we had a retracement back to 0.5. I was here before trying to show you something. So 0.382. So overall, what happened from here to here? Look at the market came back to our 0.5, 0.618 Q zone. And we're supposed to do what? Trend to the downside. Now let's see if we completed that trending to the downside with the Fibonacci retracement levels from here to here. to here. We trended to 0.786. Are you getting it? So I'm not going to take anything like a buy or sell because I know we've gotten to target, even though we're broken structure to the downside. It might want to do something like, it might want to do anything. Just wait for that chart pattern to form on your 4-hourly chart again before you take your trades. Are you getting it? So wait for another 4-hourly chart pattern to form in these areas before you do what, take your trades. Wait, even though it takes days, you have to wait. There's no entry right now for you to continue going to the downside because 0.786 was perfectly what we've gotten to target of this particular move again. So it's either it goes to 0.786 or it goes to 0.1. Again, so from here to here, what's happening? Sorry, let me come again. From here to here, then here. So the market has 3 take profits. Take profit 1, take profit 2, take profit 3. So the market might want to come back here, the last resort. Are you getting it? Then find the means. These are what's it called? Euro USD and gold. The trend, they have the highest number, the forex market and the what's it called? The forex exchange market, the currency pair market, and the gold commodities market, which is the gold, and Nasdaq usual trend. They all trend perfectly well. Yes, we're broken out of an ascending triangle, but did you retest that ascending triangle well? Because right now you're looking at just your support and resistance, your chart patterns, your this and that. But have you forgotten that this is a previous, broken structure that definitely we might come and retest it before going back home? So let me show you something now, so that you don't get carried away. I just need to give you all the confluences, what this market actually does. So there's a way I usually look at where the market is going to. So let me first of all use my Fibonacci retracement. So is it Fibonacci? Okay. Fibonacci trend extension from here to here to here. So we might be reversing any moment from now from 0.1.6, 1.0648 or 650 area, which is having is 1. So let me put a TP here. For those that want to start selling, use your brain. This market has gotten to a target. Are you getting it? So use your brain. Don't sell. You don't have to sell. Are you getting it? We have to follow structure. Now, structure has to do what's coming. So don't sell. Hold on. I'll tell you when to sell. Now, look at now. This is a take profit. This is a take profit level, right? So since this is a take profit level, the market will come here. Are you getting it? And bounce back here. And might want to bounce back here. Then do a fake out. Are you getting it? So we've gotten that target. So let me take this guy off and bring a retracement tools in. Now, let me assume that this is just dubious speculations. Let me assume that the market will retrace all the way from here. Look at it. Retrace from here. Let me assume, which is a good assumption because that's how I build my market. Because I look at my market, always give you at least 4 hours to make a decision. It does not hurry you. One of these candles is 4 hours. Each of these candles you are seeing here is 4 hours. So the market gives you up to a day, 4 to 8 hours to a day to plan your trades. So any market that you are entering and rushing and entering, FOMOing to enter, FOMO, fear of missing out to enter, you are not yet a good trader. That's why you are FOMOing. Now, I brought my Fibonacci retracement tools in now. Does it make any sense to you? Is it making any sense to you? Yes, because it's even sitting at some previous retracement to retracement level 0.382, 0.5, or 0.618. Are you getting it? Which is definitely coinciding. I get anything he wants to do, which is definitely what's corresponding with what? Corresponding with what? Anything that will make it to bring in liquidity. Are you getting it? Anything that will make it to bring liquidity, it's corresponding with it. So these are just you dubiously speculate and say that okay, this is one liquidity I'm having here. like, okay, this is one liquidity I'm having here. This is another liquidity I'm having here again. So the market might just retrace from here, then come back here, then come here, then go and take liquidity corresponding back into, what's it called? Our V, is it V resistance? Are you guys in the V resistance levels back to 830? Are you guys in 8 from 800, 797 to 830? Then find an entry, sniper entry, are you getting around these areas to continue doing what? Selling to the downside. Trust me, come and watch this video 2 weeks from now or next week. You see that this trade will perfectly sell all the way from what? Here to here. Now, just imagine that we sold from 830. Are you getting it again? Fibonacci trend extension come in now. Are you getting it? Now, you see that the market has been trending perfectly well for you. You are the one that is failing to recognize it perfectly. So if we have that, that means that this market has been doing what? Trending perfectly for you, but you've been the one that has not been building the market, perfectly well to your liking. Look at the market might be trending perfectly well like this for you. Now you have not been the one, you are the one that has not been following up, perfectly. So let's take everything off. You see that this market definitely might play out this way. If I should take, wow, I have to undo because it will take me time to take all these things out because I have to do good analysis right now. I just went from dollar straight to Euro USD. Okay, I'll do it. Come. Okay, I'll take this guy off. Okay, let me bring my Fibonacci tools in now. So from here to here, right? Okay. So I'm looking at those coming back to take some liquidities at this place here. I've seen EURUSD done it more than how many times? Yes, and so let me bring in back these two now. So if I'm to drive this perfectly well, this market has been moving what? Perfectly fine. Perfectly fine. Perfectly fine. Where are you? Hold on. Does it mean that I will have to do gold separately? Yes, I have to do gold separately. So I'll be uploading 2 videos today for you. Well, I just want to tell you how I plan this market, even though it takes time to happen. This is how I plan my market, and I can go for days. I guess this is how I plan my market. Continue trending to the downside. I guess trending to the downside because it will definitely come and take this liquidity. After taking it, you see it trending back again. Look at this under liquidity. After taking that, to trend back again. What's happening to my mouse? Hold on. Trend back again to the supply zone before coming down here. And if you look at what I've just done here now, this is not dubious speculation. This is market structure, professional market structure I've given you here right now. Because overall, where are we coming to? This is what's it called? Destination. Is either, look at from here, is either we're trying to the upside or we're doing what? Breaking to the downside. So this market has a leverage. We are 672 right now, 0.670. Are you getting 670? Then we might be coming back all the way to 850. Are you getting it? 670. Let me see. We might be coming back to 850 minus 670. We might be doing 180 pips retracement, liquidity back to the upside to retest. Look at, to retest this particular broken structure, what's it called? Structure to the downside. I guess to test that particular broken structure before come into the downside, or a fake out again like it did up here. Remember what is happening right now is what it did up here. We break back into it and continue going to the upside. So the market itself does all these chart patterns, break and retest, and continue to the upside. It uses all these head and shoulders, what's it called? Just mention ascending, descending, flag, any other patterns. The candlesticks are there also giving you your entries on the lower time frame and the higher time frame, using chart patterns on the lower time frames to form all these your what's it called? um, Maybe on the 15 minutes night it might be head and shoulders pattern, the same something, but on the 4 hour time frame, it will be a candlestick pattern of maybe probably a shooting star or probably a bearish engulfing to continue going to the downside. The market itself, whenever you see those chart pattern happening on the lower time frame, are you getting it? Go to the higher time frames. They are actually candlestick patterns on the higher time frames. This is how this market trend. From now, I believe I've gotten to my target and I've gotten to a particular low. Are you getting me? So this market is just going to take liquidity from this particular low on the, look at it. I think you just want to come and take this liquidity. Once it has taken this liquidity, or probably form a liquidity, something. Is either a liquidity pool. Sorry, let me take this off. So to me, I think this is liquidity. This line is liquidity. So it's either is to come and take the liquidity now. And if it does not take the liquidity, I know that definitely this market is just building liquidity down. I guess it's all building down liquidity. I've gotten to target already. Building the liquidity so that it will definitely go up. Take all this liquidity first before coming down to take all these liquidities again. So you should have all these liquidity concepts in your head when you are trading. Are you getting me? This is what I have for you for Euro USD and what's it called, the dollar. So probably I'll just add 2 other switch charts to this and do gold separately. Again, because I'm very busy with this period, I have other things doing. But trust me, the markets never lie to you if you are patient to watch the market and how it's going. Watch my videos, previous videos, you see me talking about all this particular, movement. The market itself moves in phases. Phases. It might be 200 pips phase, 500 pips phase, 300 pips phase. 10 loss to your 200 pips is $20,000. 20, what's it called? 10 lots to your, what's it called? 100 lots to your 200 pips is it 200,000 or something like that? 200 pips too. So calculate that using your broker. I might not have the right calculation on my head right now, but trust me, there are certain areas where you are not even supposed to trade from at all because we are just breaking this particular support, as in this particular, what's it called, to the downside. So retracing from here and just continue like that, you've missed your entry already. So except to have a very large retracement, what's it called, set to the downside. So it's a bearish market. Why are you buying? Why are you trading against the trend? Why are you trading against the trend? Are you getting? So I would rather not buy because I don't know what might happen from here. The market, the volatility might just come in and just continue, flagging down. That's why, even though after taking this liquidity, I might not buy. I'll wait for a retest again because this was only the first retest. We did not retest it. This is not a retest. We have not gotten the major retracement yet. Are you getting it? Before coming to the downside. So I'm waiting for that major one. Then if it does not give me, that means it does not fit into my strategy because I envision at Vision S wait for major break and retest of our broken structure before entering a sell position, putting our stop loss above 100 pips above it, then sell 500 pips to the downside. This is what I have for you on Euro USD. I guess you can apply that same thing to GPUSD also. I don't know if I have GPUSD here. So GPUSD, where are we? This GPUSD for us. So whatever I'm seeing on GPUSD is that definitely the same thing I'm explaining on EURUSD coming back to the upside. I'm expecting GPUSD also to do the same thing. Are you guessing it? Break to the downside. Are you guessing it? Find what's it called, support here, then come back to our all important area of value. See, you see all the liquidity concept. Let me take this thing off. You see this liquidity that was here, it broke it, came back to supply. Sweet. GP has been very fine. Also, wash. For GPD. I know my videos are very long, but they are precise. After doing an ABC to the upside, came down, came here, formed liquidities around here, broke it to the downside. Here became the next supply zone because we broken structure to the downside. Here was the next what? Supply zone. So definitely the market will come into what? Supply. The market came into supply, found supply, and continue breaking structure to the downside. So the last result we have here right now, where I've not been talking about GP, is that this is another major what area of value. Look at it. So definitely when the market comes to a major important area of value, our previous support, now turn resistance, definitely it's going to find resistance again, then bounce back up again. Are you getting it? To these areas to do a head and shoulders pattern. So I'm expecting a head and shoulders pattern. Are you getting it? From GPUSD right now, so that if it breaks, are you getting it? If it breaks to the downside, what will not happen? Because definitely it's not even supposed to break above here. So this is what I'm expecting. I'll just draw this line down. Strong, strong high. I guess it. So if we break this up, we might take it as liquidity before coming down, but definitely we're not supposed to break with a candle close, probably a 4-hourly or daily candle close above it. Then form a head and shoulders pattern to know if we're continuing this market to what? To the downside or not. So just speculating. No, not even just speculating. We know that this markets move with what? Sharp what patterns. So what were you expecting? What are you expecting? What do you have in your head that might happen? Has GDP been doing this before? You just have to ask yourself those questions before what taking your trades. Might have wasted time, might have spent time in this video, but it's important for each and every member of the Vision X family. Are you getting me? Very, very important. Are you getting me? So very, 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 very important. Some people draw their trend line like this and say that, okay, this market might definitely just come back. Are you getting to this area before coming down? I don't do that because I use what structures to trend. I use my structures to trend because I have another area of value at the top here that the market was might come to at the top here. Again, so if I should use that as area of value, I usually use area of value. That means we might be coming back up here the way we did on what's it called? We might do anything we want to do around here, but definitely it's going to build something like a liquidity concept around these areas. Then, find a means of taking it before continuing to the downside. So if it's taking liquidity at the top, just know that this market is coming with to take liquidity at the bottom also. So we'll come back to this area, and we are not seeing any bullish sign to come and break this particular place and start going up. Just know that this market is going to break down using a head and what shoulders pattern, break and retest to the downside. So breaking this is giving rise to this to continue going down. I don't think the market is ready for this breakdown. So let's just hope that the market will do what? Continue breaking to the upside from here so that EURUSD also will not break down. But EURUSD is giving us the vibe. So once we are getting this break and retest and a strong bullish daily, what's it called? Daily, or let me just use daily bearish engulfing, shooting star. It should be an engulfing. I think EURUSD does engulfing, so it should be on a bearish engulfing pattern around these areas because a lot of people are selling right now. They are stop loss above here. They will liquidate them and come back up here to continue going to the downside, which will definitely make sense. I guess which will definitely make sense to me of this particular trade because we've gotten to this was one target, we've gotten to another target again. People are seeing this break of structure, they are entering a sell. Are you guessing the break of structure? They are stop loss above you to take them out, continue doing what? Going to the downside. I guess so. This is just EURUSD and GBPUSD explained to you. I guess in this GBPUSD I have for you. Watch out for these areas, watch out for this trade. Then NASDAQ, what do I have in NASDAQ? I can't do NASDAQ now. Let me do my sweet EURUSD and GBPUSD. Sweet. These are under exotic. Is it exotic or minor pairs I call them? Anyone you call them, I've forgotten the right name to call them. Are you guessing? Any name you call them, any name you call them, GPAUD, sweet. Look at sweet markets trending well. with good sharp patterns. Are you getting it? From the downside, go to the daily. Sweet. It has been very, 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 very sweet for me to trade. That's why I want to talk about it. EURUSD, GPAUD. So look at GPAUD. Look at GPAUD. GPAUD has also been sweet. Because this is a break of structure to the down upside. So we're coming up now. We are breaking down again GPAUD. So if I should take all these things off and drive something for you, this is daily. Are you getting it? This is daily. So this is higher high, higher low, higher high, higher low. That yes, on that higher high again, higher low, for continue up. So Euro GPAUD also has been trending perfectly well. So I'm coming. Now, someone might ask that where is this market coming to? It's coming back to this trend line. Trust me, it's coming back to this trend line and it's coming back to this particular support. I guess in support again, which corresponds with this trend line. If you even bring any other confluence in, you'll see that we're coming down there, So if you'd have been selling from here, you would have seen all this liquidity concept, knowing that after a break of structure to the upside, the market will do what retrace. Look at retrace to the downside. I guess it broke structure to the upside again, retrace to the downside 0.5 or 0.618, broke structure to the upside again. So we have to retrace what to the downside, this time probably a deeper one because of this high, large, or what's it called, sell pressure that we're getting on what's it called. So we are trading in between this particular move right now after this particular move. Are you getting? So since we have those two moves, you know that we're trading in between there. So where is the market coming to? Major Fibonacci retracement tools were coming back into this particular Q zone area, which corresponds with our support and resistance zones here. I guess before we can start buying to the upside again. So watch out for your levels. The levels are there. What are the confluences you are using? Very important. It's there. Yes, it's there. Trust me, it's there. It's there. The market never lies. You are the one that is failing to analyze the market correctly because this market was actually oversold here. Look at it. It was oversold. It was oversold. So we're supposed to be buying. No, we're supposed to be selling. And it was oversold. MACD is showing oversold. How many confluences are you using? I'm not saying that you use indicators to determine. They just help you as confluences. This market was oversold. Is it over? No, overbought, sorry. It was overbought, sorry. It has been overbought. So we have to trend to the downside. So where did this trend line come from? I just placed a trend line to it from the bottom, connecting the dots on the bottom. So it's either we're coming back. Zero. I don't usually use trend line of what most of the time. I just try to put them as confluences. I guess let's try to put them as confluences, knowing that we're breaking structures to the downside. But I don't usually use that. I just flow with structure because I know this was a previous structure and it's coming very, very hard on it. This is a previous higher low now, higher low. No, higher high, sorry. So we are breaking it right now with a daily candle. So if this candle breaks and sits on that particular structure, know that we are coming to retest that particular broken structure. So if I should just this on the Farley variable, you are seeing how sweet it is on the Farley short structure. That's why I usually use Farley to do what? To trend my market. Look at this market was having these areas of value. So I take my change of character and my areas of value very, very serious. It was a previous support, resistance, not turn support. Now came back into that resistance. We came up, we couldn't break structure to the upside. Are you guessing what happens next? Look at it. What happens next? What do you expect to happen? We retested it now, a broken structure, we're broken back into it. So I'm expecting what? A retest. Remember what happens on EURUSD. I guess I'm expecting a retest, right? GPAUD. I'm expecting a what? A retest of this particular structure. Are you getting it? My stop loss above here. Are you getting? Then sell down this way. This is just how to trend your market. Stop procrastinating. Stop FOMOing. Just stop it already. Are you getting it? Because the market is trending perfectly well. Now look at, if this market comes back here and retest, we enter a trade from here, put our stop loss above here, take profit around this area. Are you getting it? Definitely we'll have to come back to this particular structure again, take entry again, come back. If it breaks it, that means to break this particular ascending channel that you are seeing that has been building around this area. Are you getting? So we have two areas, very important areas right now. So it's either with this one or that one. So you can see your areas of value happening and trending perfectly well. So if you break down, we are breaking EURUSD right now. You see that we test this particular structure again, continue breaking structure to the downside, taking here as liquidity, before finding demand in these demand zones. Are you getting it? To continue doing what? Going to the upside. So your areas of value, support and resistance, all coupled together with your other conferences, your RSI, your MACD, how many conferences you use. For me to have an A+ setup, I have to have at least 5 what's it called, conferences, and the last one is change your character back to the upside. So anywhere it gives me, I change your character back to the upside, breaking structure, retesting. Are you getting turning here to support? Then I continue buying to the upside. Are you getting it? Or something like this, break, retest, continue buying to the upside. So whatever it gives you, you should know that you should not be buying until we get to all these, what's it called, until we get to all these particular areas of value. This is a major area of value. This is not too major because this is a support. I guess, and so whatever happens here, you need to have a change of internal change of character retest before you continue going. So how are you looking at your market is very, very, very important. Then Euro AUD also, we had a trade from 1.5885 all the way to 1.7000. That's over 1,200 people, 1,100 pips to the upside. If it could load very fast before I end this particular video and do what's it called, the gold analysis, how sweet gold has been, and we can close for today so that I can do whatever I am doing. So I'm trying to show you EURUD. EURUD is also sweet, using perfect market structures tactics. Are you getting the trend? So look at, you can see that EURUD is breaking down also. EURUD is breaking down also. I'm on this trade all the way from here. I think I entered a new trade today. Is it today or yesterday? I think today we're breaking down. Why are we coming down? Why do you think we're coming down? That is because the market itself has been trending perfectly well. Look at the daily. Let's start from the daily. This market is trending perfectly well. Look at EURUD. We first got a double bottom in September of 2022. Then we broke and changed character to the upside, here becoming, this is why I've been training EURUD, very sweet. That here becoming what? The previous AW bottom, break and retest. The target also was sweet. We traded this, and we made this. The target was very sweet. I think I took this trade up to this area. So is it here? I don't know. I will show you. So we traded that. Then EURUD came back to this particular previous supports, resistance, then turn support. And when we got this, we broke and continued this market to the upside. And this was where I called this particular trade. Remember that we're coming back to this particular area of value, which is 0.61 to 0.786. I get in a previous support. How many confluences now? Previous resistance now turned to an area of value. Also acting at 0.61 Fibonacci Q zone. Also using, is it this one? No, I think is it a weekly or something like that. I have a lot of confluences I used here. So this was where I called this particular Euro AUD 1.5885 entry, because when we were coming down, we'll go to 0.618, the the market got as the selling got exhausted, sellers got exhausted, and it was giving us how many days of indecisions, how many days of indecision. So that's sellers exhaustion. Because this market was big, big, big. When we go to this area, we try to trace big, big, big. When we go to this particular previous area of value, we actually found all this retracement. That was where I told you guys that, trust me, we are coming all the way to 0.7, say $7,000 area and 1.7000 area to find, take profit. So if I should, remove all this and come back very well, you will see how we drove this market all the way to the upside. So if I bring my Fibonacci retracement tools in, you will see that, what's it called? Fibonacci trend extension tools in. Perfect. Go and look that trade. Go and look for it. This particular trade happened June 15th, I think, or so, all the way to take profit of 22nd of August, which is about 2 months to happen. 1,200 pips. Sweet money, sweet swing trading. You get me? So don't get carried away when you're trading, because at the end of the day, whatever I'm seeing here right now is that now we brought structure to the upside. What are you supposed to do? Wait for retracement to the downside. Are you getting it? Retracement, this is a break of structure that happened here. Are you getting it? So we're getting the retracement right now. And what is happening with that retracement? If we go to the lower time frame, you will see that at the end of the day, we actually did a retracement. Sorry. Hold on. Look at it. The market has been trending perfectly well now. We came back with an ABC move back to, what's it called? These Q zones, this support, resistance, support, before resistance, don't support, happening at a particular area. Now we're coming down back. I think these areas are what other block areas. So are we going to take liquidity of the other block? We're going to trend from here. I'm about to find out. Same way EURUSD is trending right now. So where is EURUSD going to? If EURUSD is going to come get here, that means we are going to want to get here also before coming back to the upside. Or let's leave sentiment or emotions out of it and just trend this market. If this was a break of structure, so if I should take these two guys off, I should take these guys off, take this guy off, take this guy off, take this guy off. Are you getting it? We are trading in between this particular move right now, right? So if we're trading in between that particular move, we can as well bring in our Fibonacci retracement tools in if we're going to get a change of character from there on the lower time frame also. So if this market is going to bounce, are you getting it? We should know that it's going to bounce from 0.618, which corresponds with, I don't want to put this trend line. So are we going to bounce from here? Come to be very accurate. So we're bouncing from 0.618, or we are turning this particular place into liquidity. Let's go to the 4-hourly chart to find out. So here we are right now on the 4-hourly chart. If I take this guy off, should I take it off first? Yes. What are you seeing here right now? This is a descending triangle, perfect descending triangle happening here right now with an extension all the way to take all this liquidity out. So if you have not been in this trade from 6,800, 1.670, we are 1.655 something right now. How many pips gone already? That's over 250 pips gone already. Are you getting it? But this market is liable to come back into this particular trade. It happened. Let me show you. EURUSD has been perfect because I love what it does. I love what it does. Are you getting it? Look at now. It has broken this support. Are you getting it right now? So if it's coming back to find a means to retest it and it's not breaking it, trust me, this is your entry again to sell, to break to the downside. So an entry from 0.6630 or 6620, depending on how the market comes back to this place. Don't set it down. Wait until you are seeing a perfect entry. So a sniper entry might come from here, your stop loss above here. So 6620, put it at 6800. That's about, let me just say, 600, 200 pips, 6600 to 66800 stop loss, 200 pips stop loss, and you are taking 6660 to 250, 250. That's about 400 pips to the downside, because definitely I think this is what liquidity on the 4 hourly chart building to take everybody that's putting their stop loss under here, or position traders, or definitely. So I'm taking this as liquidity to take them out before finding a way to continue this market to the upside. So this is my analysis for gold. Sorry, this is my analysis for dollar, EURUSD, GPUSD, EURUD, GPAUD. I would have done oil, but I don't think I can do that right now. This video has been too long. Oil, thank you, oil. Oil has gotten to $90. Go and watch my US oil video. I think I have a US oil video. Oil was very sweet from $74 to $19. You understand? Oil has been very, very, very sweet. Oil has been very, very sweet. Hold on. Look at, see the trade. Oil has been very, 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 very sweet. Look at our entry. Here's oil. Look at 7th. Look at June, 1st of June. Look at, this was where we took our trade from after breaking structure. We tested that previous structure. We took our trade from $74 all the way. Look at where oil is right now. 15,000 pips. 50,000 pips already. Look at it. Sweet. This market has been very, very sweet. US oil, 15,000 pips in profit already. 0.1. Is it one lot? One lot would have given you, one lot would have given you $15,000. Or is it 15,000? Look at oil. Oil has been very, very sweet. $55,000. 10 virus would have given us $150,000. How are you getting it from $75? And US oil has been trending. I did on the analysis here. Go and watch my analysis from US oil. US oil full market analysis from $74 to around $25. Look at where we are right on oil. Look at right now. Look at where we are right on oil. Oil has been trending perfectly well. Was is on that entry again to the upside. So to me, this is liquidity. This is liquidity, so it needs to come and take this liquidity out, or we can call it resistance. So this whole area resistance is sweet, 15,000 people. Sweet, sweet, sweet US oil trade. Sweet. Wow, watch that video. Very, very important. So this is what I had on oil. Oil has been trending perfectly well. Breaking above the resistance, breaking above this, if you not buy from $64, US oil was there because I gave the trade from there. US oil full market analysis from 74 bull run to $125 projection 2 months ago. That's the 1st of June. I watched that video. Right now. Oil has done over 17,000 pips to the upside from $74. Oh, sorry, 16,000 pips it has gotten to right now. Or it would have done probably from $65, $67 sniper entry all the way to the upside where we are going right now. It would have done about definitely 64 to 90. That's about 26,000 pips to the downside. One lot, $26,000. 10 lots, $250,000. Depends on how many lots you've been holding. So we are swing traders here. We are like investors. We take our time. We don't rush things. I guess in it, definitely after every break of structure, what happens? We are supposed to come back to a major resistance zone, and a support zone, find support, they continue trending to the upside again. So this market has been very sweet. I don't know why you're looking for just 20, 10 pips out of this market. I'm suffering yourself to come here every day to, find trades to trade. So this year I'll stop for now. I have many other trades coming up. I get many trades, but these trades are perfectly fine and sweet to my liking. That's why I said, let me take my time today to do a video for my community, and my community is growing. Kudos to us. We hit 1,000 subscribers on YouTube, and we're about to get monetized. And the moment we're monetized, a lot of people seeing our contents like this and are helping the community, help myself, because trading is actually a boring business. Do you know what it means? That you go and come back, you go and come back, you are in 200 pips already, your trade will trace back to 200 pips. You would have said, oh, if I have known, I've taken profit and entered again. No, leave your market to run. If your light comes back to 1920, leave it to run. You have your target. Your target is at the downside. Yes, your target is at the downside. So leave it to run. Leave it to run. Trust me, bro. Leave this market to run. Don't look at the lower time frame and try to predict. That is why you are losing money, because the market is actually doing what? Trending on the higher time frame, not the lower time frame. Because lower time frame, fundamental news tends to shaking the lower time frames, disrupting the movement where definitely it will still get to its target, but it will disrupt the movements for you, and you'll be thinking like, oh, this market has not been fair to me. But the market has been very, very fair on your 4-hourly chart, your daily and your weekly chart. You are the one that does not want to risk more money into the market, or probably too greedy enough to want to use $1,000 to make $10,000 in less than 1 month, which is not what the market is all about. It will definitely turn you to what liquidity, take you out, and continue trending perfectly well. This is what I have for you. I still remain the CEO of VisionX Limited, and today's date is the 14th of September 2023. Slow and steady, we all get there. Trust me, the forex market is very sweet to trade if you know what you're doing. If you need mentorship, I don't know if I can open my mentorship program again for anyone or everybody who's been busy with other projects this period. Trust me, this market has been trending perfectly well. If you don't understand anything, go back and watch this video over and over and over again. You understand. You see that sometimes patience is the key, because you might say that, oh, I can be in the market making money every day. That's not possible, because fundamental news comes out of this, as in all these currency pairs, the commodities, the oil, any of the market you're seeing, fundamentals comes out every day. So you use liquidity to take you out. On the long run, if you are swinging in the long run, why I prefer swing trading to day trading? I might make 10,000 today, make 20,000 tomorrow, lose 15,000 tomorrow, make 30,000 next tomorrow. Definitely one day I might lose 50,000. Then wish I was supposed to wait for maybe 2 months or a month or weeks to make at least $100,000 without stressing myself, going to bed, sleeping, and waking up. That's even the reason I even opened what was it called, the Telegram channels and the YouTube channels, to start, talking to, have a community where I can interact with people, because it actually was a boring business for me. Again, you see, look at this trade, perfectly sweet well. So this is what I have for you. Take care and bye for now. Bye bye. I'll do good analysis after uploading this. I'll just run a quick go analysis of like 10 to 15 minutes and upload for you guys to see. Take care and bye for now. Bye, 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 bye.